Hi, I am Ashik from Accounting Syllabuses. Welcome back to my channel, where I upload several accounting tutorials weekly. So today in this lesson, I'm going to show you how to prepare an income statement for the trading business. So let's get started. Okay, so today in this lesson, I'm going to show you 4 complicated adjustments to prepare this income statement for the trading business. Okay, so here to prepare this income statements, we'll see an example which is taken from Cambridge A-level accounting first paper. Okay, so let us have a look at the questions on the screen. Unlimited a trading business, sales are made on the credit basis. Okay, the following information was available at 31st December 2020. Okay, so here we have a trial balance, items are given. So let us have a look at the questions. There are some adjustment. The following information is also available at 31st December 2020. Okay, 1 2 3 4, there are 4 adjustments, so we'll adjust these adjustments here to prepare the income statement. Okay, so let us write here first of all income statement. Okay, so here in the question we have sales revenue. Yeah, so what is the amount here? $923,000. Okay, so we know sales revenue will come first of all to calculate the gross profit here in the income statement. So let us write here revenue. Okay, it is $923,000. 920. Okay, very good. Then what do you have in the question? We have here cost of sales, which is $466,000. Okay, so we know gross profit equal to revenue minus cost of sales. Yeah, okay, so let us write here cost of sales. Okay, it is $466,000. So if we subtract this amount, this cost of sales, from the revenue, we get $457,000. Okay, so what is this amount? This is gross profit. Yeah, so let us write here gross profit. Okay, so we calculated gross profit. Now let us have a look at the questions once again. So here we have administrative expenses, which is $171,000. Okay, so all expenses will be subtracted from this gross profit to calculate the net profit or profit for the year. Okay, so let us write here administrative expenses. Okay, expenses, so it is $171,000. Okay, we are writing here in the bracket, we have some calculations, so final answer we will write here. Okay, very good. So next item is here in the questions, we have distribution cost. Yeah, so let us write here distribution cost. Okay, so it is $63, so we'll write here because it has adjustment. Okay, very good. Next item is here in the questions, we have debenture interest. Okay, it is a finance cost, we'll take it later. Okay, so these 2 expenses we have here in the question. Okay, now let us have a look at the adjustment number 1. Administrative expenses included insurance of $16,000 for 4 months ended 31st January 2021. Okay, so accounting year ended on 31st December 2020. Yeah, but insurance is paid up to 1st January 2021. So 1 month insurance is paid in advance. Okay, so here $16,000 is paid for 4 months. Okay, so how much for 1 month? So it is $4,000. Okay, this amount is paid in advance. Now what to do? This amount has to be subtracted from the administrative expenses. So let us minus here $4,000. Okay, great. Now adjustment number 2. Depreciation should be provided on non-current asset at 25% per annum using the reducing balance method. Depreciation charges should be allocated 20% to the distribution cost and 80% to the administrative cost. So here 25% rate of depreciation and will be applied as balance reducing method. Okay, so what is the cost of non-current asset in the question? It is $1,140,000 and there is a provision which is $140,000. You know, the main thing of reducing balance method is you have to subtract the provision for depreciation from the cost of the asset to calculate the net book value, okay? And depreciation, the rate of depreciation will be applied on the net book value, okay? So here the cost of asset is $1,140, okay? So here we already have $140 provision for depreciation in the question. Okay, now if we subtract, our book value is here. Okay, now on this $1,000 net book value, we have to apply the rate of depreciation, which is 25%. Okay, so if we calculate 25% here, we get here $250,000. Okay, this is the amount of depreciation. Okay, but one more adjustment is here. So from this $250,000, 80% will be taken as an administrative expenses and 20% will be taken as distribution expenses, written in the question. Not complicated. If you understand, you can do it simply. Okay, so now we multiply by 80% to calculate the admin expenses. Again, we will multiply by 20% to know the distribution cost here. Okay, 250 times 80%, we get $200,000. Okay, and here if we multiply, we get $50,000. Okay, so now we will add this $200 with this admin expenses, and we'll add this $50 with the distribution cost. Okay, very simple. Yeah, okay, very good. So number 2 is done. What about number 3? The amount of credit customer $3,000 should be written off to administrative expenses as an irrecoverable cost. Okay, so this is a bad debt. This amount will not be recovered. Okay, the customer will not pay this amount. Now what to do? Minus 3K. Okay, very good. So now we have one more adjustment. Let us have a look at there. Number 4, debenture interest was outstanding for the second half of the year. Okay, directors had issued additional debenture of $50,000 on 1st October 2020. So our year ending is 31st December 2020, but on 1st October 2020, one more debenture is issued, and the price is here $50,000. Okay, so here in the question we already have debenture which is $250,000. Okay, so already we have debentures which is $250,000. So is this amount from the beginning of the period, from the 1st January 2020? No. So here the $50,000 was taken in the middle, 1st October 2020. Okay, so how much there was in the beginning? It was $200,000. Okay, so this $200,000 is from the beginning of the business. So on this amount we have to charge full year depreciation. Okay, so here $200,000 multiplied by 8%. Yeah, in the question it is 8% dividend. So if we multiply, we get $16,000. Okay, this is the interest on dividend. Okay, now this $50,000 was taken on 1st October. So October to 31st December, how many months? October, November, December, 3 months. Yeah, that means we have to charge interest on this amount for 3 months. Okay, so how to do it? So here same way, $50,000 times 8%. Okay, divided by 12 and multiply by 4. How much comes? It is $1,000. Okay, so total interest is here $17,000. Okay, this amount will be taken here. Okay, so this is a finance cost. We'll take it later. First we have to calculate here. So we have no more adjustment. We finished all of our adjustments here. So now if we calculate, means if we add this $171,000 and $20,000, then we minus 4 and 3, what we get? Here we get $370,000. Okay, then if we add 63 and 50, we get here $113,000. Okay, now what to do? Now we have to subtract this both the amounts from this gross profit. Okay, so if we subtract, what we get? 26. Okay, but it is a negative figure. minus 26. So what does it mean? It means that it is a loss. What loss? It is an operational loss. Okay, so we can write here loss from operation. So let us write here loss from operation. Okay, so we got it. Now we have to subtract finance cost. Okay, so let us write here finance cost. So here let us have a look at the question we have here. Debenture interest $8,000. Okay, but what is our actual amount? Here we calculated debenture interest. Yeah, so it is $16,000 for 200,000 and $1,000 for $50,000 debenture. Total interest on debenture is here $17,000. So from this $17,000 already $8,000 is paid. So how much left? $17,000 minus $8,000 equal to $9,000. Yeah, so this $9,000 is not paid. It is unpaid amount. So we have to add this $9,000 now. Okay, so if we add, we get here $17,000. So this is another expense, finance cost. So here already we have loss on operation, which is $26,000. Now again we have finance cost, which is $17,000. So if we subtract this finance cost from this loss, operational loss, so what we get? We get here $43,000. Still negative figure, it is a loss. So this is called loss for the year. Okay, so nothing is complicated, just this part is a bit complicated because here you need to adjust so many things. You have to calculate your depreciation, you have to calculate the interest on debenture, then you have to adjust this amount here in this income statement. Okay, so this is all about our today's lesson. I hope you understood and enjoyed this lesson. If you think that this video is helpful for you, please share with your friends. And I believe if you understood this one, you can solve so many questions like this. And please consider subscribing to my channel because there are other so many accounting tutorials. Those will help you to learn accounting, to understand accounting, to prepare yourself for your exam or test. I'll see you soon with new video. Until then, bye bye and take care.